Okay, let's call the meeting of the November 9th Pension Board for the City of Norwalk to order. First, I'd like to see if we can have approval of the minutes. So Rich, I think you and I are going to have to do this. I guess we can approve the minutes without a quorum, but can we have a motion?
Motion to approve the minutes.
Okay. I'll ask if there's anybody in attendance that wants to make any public comments. Going once, going twice, okay. Is, excuse me, Jerry or Tina, who's going to cover we have one pension application?
Yes, Jerry's on. Jerry.
Oh, Jerry's on, okay.
Do we have
So Jerry,
do
I'm
we
not
have
sure, we can approve this without a quorum, but you know, I think we'll express our view, and if it can be approved otherwise.
My understanding is that without a quorum, we cannot approve any pension applications.
Okay, well then we'll table it till the next meeting, but
right. The only thing I do have to provide to the board, which is really, Jim, a follow-up from last month's meeting, there was a request for some clarification on Milt Gideon's application with respect to the contingent beneficiaries. At the time the application was submitted, he was not specific with respect to the percentage distribution between the two co-contingent beneficiaries. He has since provided that, and it's a 50-50 split. So I just wanted to provide that information to the board as a follow-up to make this application complete.
okay. All right. So we'll approve the one that was available for tonight at the next meeting then.
Yeah, we'll have to defer this application until next month's meeting.
Right. We were going to discuss the international equity search and hopefully pick one of the three finalists, but without a quorum, I think we'll have to defer that. The one thing, Tom, that I don't personally have a good feel for it, and maybe you can see if Britt can discuss it with us at the next meeting. We were concerned about the one finalist that only has one client in the vehicle. And they provided a lot of information about, how they would handle things and so on. Hard for me to tell reading through that if that gives us enough comfort. I don't know, but so that's maybe one thing that maybe we can cover at the next meeting with Britt.
Yeah, so that was part of the conversation, was the going over the vehicles.
Yeah. Okay. So with that, I guess we'll move on to the performance review.
Okay, would you like me to share my screen?
Sure, that's fine.
Okay, so I'm going to go through the flash report for the periods ended 6/30, and then at the next meeting, we will have the full performance report.
Okay.
So this is as of 9:30, and see if I can make this bigger. Can everyone see this okay?
Yep, we're good.
Okay, so from a asset distribution perspective, the asset allocation is generally fine in terms of the targets and the actual and staying within the ranges. So if you look at the top here, we show total equity. The weight is a little bit below, and this is because of the declines we've seen in equities. So 66.27%, the target 69, that's within the range for total equity. US equity was also slightly underweight, 32.33% versus 35. Same for international equity, 19.9 versus 23, but they're both above the bottom of their range. So international equity is a little closer. The target bottom of the range is 18%. Global equity is right near its target, so that's not as volatile, the long short strategies, as the long only. So that's what we would expect to see here. Private equity, we have that valuation smoothing plus the lag. So we see that private equity is above its target, 5.48% versus 3%. There's no new asset class contributions there. So that's in runoff, but just to be aware of that, what we call the denominator effect, where the overall asset pools declined. And so it props up the value of an asset class that, like private equity, with smooth valuations. Domestic fixed income is closer to the target, 18.44 versus 19%. Absolute return, I'll point out here, the target is 6%. So this is close to the top of the target. And the CIO of the UBS investment strategies for hedge funds is retiring. So that's expected to happen, the transition, in the second quarter of next year. So new CIO, who's part of the team, taking over as of the beginning of April of next year. We are recommending that UBS come in and present. When we get to performance, you'll see that, one, we have observed what we'd expect, where absolute return has provided some diversification to the total plan return, and it's a positive return on an absolute basis. So that's been good to see. The second aspect is that we do want to have them discuss the transition. So we're not expecting, based on our conversations with UBS, our team participated in an on-site at UBS, we're not expecting significant changes in the strategy, but Bruce, he's been before this pension board a number of times in the past. He does have very deep hedge fund relationships, so that informed some of his views from a macro perspective. So what he saw as the best opportunities from a top-down perspective, and then also the fact that he was doing certain types of niche investments based on his network of relationships. So we do foresee a change in terms of more reliance on all of the strategy heads that are working with underlying hedge fund managers, researching strategies, emphasizing more what those strategy heads are bringing to the table in terms of ideas. So it is a material change. We're not recommending action at this point. They have done the transition in an orderly way, but it is one we're monitoring closely, and we do recommend that UBS come and present to Norwalk in the new year. So that's something that we have on the forward calendar. The other aspect I wanted to mention, Jim, is that Britt had brought this up in the past, and we're intending to come back next month on the OPEB asset allocation, a review of the asset allocation. So one of our, what we call capital markets research team members, they do strategic planning work for clients like asset allocation studies. One member of that team, Rick Ford, who's also an actuary, he's leading that research project, and Britt and Rick will be presenting that next month. So our thinking was, you don't want to have a manager meeting on top of that. Yep. It's a lot for one meeting, plus the discussion of these international equity managers. So I didn't want to preview that. And then real assets is overweight. So just moving down the line here, real assets at 7.8% versus a 6% target, and cash slightly underweight. I heard Jim and Chitsame, you mentioning cash, so you may want to cover cash now or later, but you can see.
Yeah, it's just a quick mention. So Chitsame has 7.7 million on hand right now. And she said that's enough to get through benefit payments for November and December. And then she'll come back on at the December meeting and make a proposal for first quarter cash needs.
Okay. Sounds good. Thank you. So the total assets as of the end of September were 439 million. And I will point out that through the end of October, that markets were up in October. So US equities were up over 8%. International equity was up as well. Bonds were down a little bit, but that was a better month than the month of September.
Mhm.
Then if we move on from here, so we show different performance periods. We'll have more detail in the quarterly report. This is showing fiscal year to date, so the 3 months ended 9/30. Then we show the last year, 3 years, 5 years, and 7 years. And if you look at the manager performance in US equities, so the active managers have been doing well, but it's relative. So you look at Columbus Circle actually positive fiscal year to date, but certainly not for the last 12 months. That reflects the bear market we've been in, but you could see LSV too has had strong outperformance in value. So the value managers and the growth managers, so LSV and Columbus Circle, have been doing well, but this is in a very significant down market. And the portfolio also does have a small cap bias. So that's reflected here in terms of small cap stocks doing worse than large caps, particularly in the growth area.
Mhm.
And then international equity, the performance recently is very close to the target. And one of the issues in the last, call it 3 years, it's reflected here is performance from Artisan. That's the replacement search that's ongoing. Silchester has been pretty close to the benchmark in terms of its short-term performance, but the long-term performance is very strong for Silchester, and BlackRock has been fairly close to the benchmark, really, in terms of its performance. So that's one that we're also monitoring, but in terms of the search, the focus is on Artisan. And then the other aspect that I did want to mention was in global equity long short, you can see that Blackstone has underperformed. Performance from ABS has been much stronger. It has had some benefit relative to long only equity, but that's really been driven more by ABS. And we do have a search that we're undertaking there as well. So that is also in process. And then private equity, this is a huge topic. I would say in general, you may be wondering how you can have positive returns given what's happened in the public markets. So one is that you do have the lagged aspect, the valuations here, but that only really explains part of this. Part of it is also that these aren't marked to market every day, like publicly traded stocks. And I'd say this is an ongoing topic of debate, is how much of what's happening in the public markets will be reflected in private equity valuations. And we've also seen reduced deal activity because of what's happening in the public markets and the overall economy. So less deal activity in private equity. So I did want to cover that because it does stand out, and we get questions about it, and I think the questions are valid. So that's private equity. Domestic fixed income, the performance there is relatively close to the benchmark over the short-term periods. And the managers that's underperformed has been MetWest, which is understandable given the active credit component there relative to the benchmark. It's definitely been a very difficult period for bonds. I'd say the upside is, and you'll see this when we talk about the OPEB next month, is that the forward-looking return prospects for fixed income now are much more attractive. So we've been in such a low yield, low interest rate environment, and now we've taken a lot of pain year to date with the worst year to date performance in the history of this index, dating back to the 1970s, the Bloomberg aggregate. So we've taken a lot of pain this year, but the forward-looking return prospects with yields of north of 5% for investment grade fixed income, that's the silver lining of the pain this year. And then absolute return, as I said, performance from UBS has been very strong, and it's delivered what it was supposed to in terms of providing some diversification to the plan. And then real assets, I think this is one that it may be surprising in some sense, because if you think about the inflationary environment we've been in, the highest inflation in 4 decades, why would this strategy have a negative return? And that's really driven by the exposures that it has, what we call the third pillar, including areas like emerging markets. So that performance is not as poor as some parts of equities overall, but it's definitely negative and not providing inflation protection right now. So we recently held a call with them about this strategy, and their argument, I think there's some basis to this, is that when they look at the relative attractiveness of the parts of the market that they invest in relative to markets like the US, that they see very attractive valuations and opportunities. So from a long-term perspective, they see very attractive potential future returns, but certainly the recent performance is poor. And then finally, we do show the performance versus the benchmark, and you can see it's slightly above the benchmark, but the short-term returns, with the last year being negative 16%, that has impacted the longer-term returns. We've been in such a strong return environment until this year overall. So you can see that reflected in the long-term numbers there. So I'll pause there and see if there's any questions or comments at this time.
Yeah, I'm good.
I'm good too.
Okay, I'll stop sharing my screen. And as I said, we'll come back next month. We'll have the full review, and based on the quarterly performance report, and we'll also be discussing the OPEB asset allocation and the manager search for international equity.
Okay. Do you want to, should we go over OPEB now as well? Is that worth covering, or just do it next month?
We can. I thought because it was not an OPEB meeting,
Okay, yeah,
it would the protocol would be to cover it at that meeting.
yeah, that's fine. How far in advance are you and Britt looking at our agendas into 2023? I mean, do you have a rough idea, at least the first quarter, for what do you think we should cover?
So a couple of things are
We don't have to do it now. I was thinking
Yeah.
that'd be something we'd cover in the December meeting, hopefully.
yes, so that would definitely be part of it as well, in terms of the year recap and the work plan for next year.
Okay.
Yeah.
All right. Is that it? Anything else to cover tonight? I don't think so. For next meeting, I don't know if Chitsame does this, but we'd probably want to go into, I think we sort of decided we're going to do executive sessions when we talk about manager selections. So we'll want to have part of the meeting next month be an executive session to close out the international equity discussion. Okay. All right. Britt had provided the calendar for next year. I don't know if everyone had a chance to see that. Looks pretty straightforward to me. Second Wednesday. I don't think we need a motion to approve that, but
No, I think that was for information purposes only. We wanted to bring it to the board first before we submitted it through the appropriate channels through the mayor's office.
okay. Yeah, I think it's fine. If there's nothing else, I think we're done. Anything else to cover here? No. If not,
Motion to adjourn.
motion to adjourn. I will second that. All in favor? All right, no opposition. Okay. All right, meeting adjourned. Thank you very much, everybody. Quick one.
Everyone have a good month.
Thank you.
Bye-bye.
Next month. Yep.
Everybody.
Bye.
All right.
Good night.
Good night.